Hey, good morning, Realtor Avery.
And good morning to you too, around a quite Chuck.
Welcome back.
Woo!
Woohoo! Welcome back. I mean, you're just a world traveler, You were in Panama, you were in Washington D.C. Where didn't you go?
Well, I haven't done Panama yet.
Oh, I thought you went to all in 1 week.
No, just
Oh,
DC.
just DC. When are you going to Panama?
Panama's next.
Okay.
Yes. Yes. So
All
I'm
right.
excited. I'm very
When are you
excited
going?
about that.
When does it come? What I'm
February 1st.
all right, all right.
Yes.
I'm going on a road trip, President's Week. So
Nice.
yeah, Owen and I are going on a road trip, just the boys. We're gonna stop. So if anybody watching has suggestions between here and Miami, places that we
Ooh.
gotta stop and see, or like if you know of a little, a place that has the ultimate burger or something in Nashville, or I don't know, like let us know. I'm all ears. I'm ready.
And how old is Owen?
He's 16.
16. Okay. So
Mhm.
I know, and I've never done it, but I know there was one time I know my sister and my mom, when they were going to Florida, they stopped at Falling Waters at the Frank Lloyd Wright House. I don't know if a 16-year-old is interested in architecture or not. So
Mm.
maybe, but
Where is that?
it's between Buffalo and Florida.
Okay, fair enough.
I'll look it up and get back to you. Or if
All
someone
right.
knows, they can chime in. But yeah, I mean, an architectural tour would be nice.
Okay. Speaking of, I did see a story one time. This is a long time ago. Wow, which really jogs stuff out of the memory. I swear I saw a show one time where they were transporting a Frank Lloyd Wright house in Jacksonville,
Oh,
like they were moving it on a barge across the St. John's.
that's cool.
Yeah, I don't know how it was bananas, but neat.
Yeah.
Um,
So,
cool.
I love, so one of the benefits of collaboration and working together is you can elevate ideas, right? You can take something. So for the longest time, Chuck and I, when we look at our show schedule for the month, and
Yeah.
we would have one called potpourri, right? Because I am a Jeopardy watcher and I love the potpourri category. But then Chuck said, no, we're not going to have potpourri. It's going to be current events. So I like current events, like current trends, what's going on right now in real estate. And so I think that that's a great segue into things that are happening. Like,
Well, I think, and
real estate.
especially this time of the year where, this is when we take on a lot of new business, right? Where, we've set our goals for 2025 and how many clients are we going to be able to help, and how are we going to do that? And we end up being in a lot of consultations now. And I think in order to be ready for those consultations, we have to be up on current events. And especially the trends in real estate,
Mm-hmm.
right? And I think just say that we're going through some challenging times in real estate right now would be like, yeah, you think.
Yeah.
I was watching Jared James reel on Instagram on my way back, and he was talking about how in 2024, I think the number of home sales was 4.06 million. Like
Right.
4.06 million. He
Right.
goes, and what, like it was the lowest, number since 1995 or 1997, a long, more than 30 years ago, basically.
Mm-hmm.
And, but the thing is like, we have 340 million people in this country now. And back then the population was around 270 million. So even though the number of sales is the same as it was then, we have so many more people that need housing. So it's just exacerbated the supply and demand problem that's,
Yeah.
we've all experienced as realtors for the last 5 years. It's been something.
And there's no, I was talking to someone recently who's not in the real estate industry, and just saying that we have such a housing shortage in this country. Like, we're short, the numbers I hear, which are probably low, are we're short 6.5 million units,
Yeah.
housing units, condo, apartment, single family home, mobile home, whatever you want to call it. We're missing 6.5 million. And so the person I was talking to was like, well, so what do you do about it? Well, there is no one fix, right? There's no
True.
one reason.
Right.
Something that we've been talking about, that a lot of people are talking about right now, is whether you call it the silver tsunami, whether you call it peak 65, in the next 2 years, about 4 million Americans, we're just talking about our country, will be turning 65. That's a huge change. The housing needs of someone at 60 to 70 is different. 25, 35, 45, 55. And we also have the deferred capital gains limit has not been changed in a really long time.
Right.
So it's again a multi-factor effect. I'm over 65. My home has appreciated quite a bit so that the capital
Hmm.
are an issue. So I don't want to sell because the capital gains taxes will be too much. I'm just going to leave this to my kids, and then when I pass, they'll get the basis will be different. I'm not a tax advisor, but it makes financial sense for them to keep this property rather than sell it. And then on top of it, hey, you know what? I'm going to be retiring. I want to travel more. I'm going to buy that property in Jacksonville, right? Like, and so now I'm coming in with a great 401k with great savings, and I just want to buy, a small 2-bedroom, 1-bath, right? And I can go in and I can make a cash offer. Well, I might be competing with a first time buyer who needs a mortgage, who needs some assistance. They don't have any house, let alone I'm buying my third property or second property. And it makes it very difficult for those first time buyers to get a house. So we have some people owning more than one property and other people who aren't owning any properties. And that's where we're feeling like this squeeze of
Oh, there's a squeeze, all right.
and potential buyers is getting more tight.
No, there absolutely is a big squeeze.
Yeah.
I don't blame
And
people.
and I'm only going to harp on this for one more minute because I know that I was just in DC talking about these things.
Mhm.
And you make the case for like, how does this impact someone? So the exclusion for capital gains, 250,000 per person, 500,000 for a married couple. Well, if I'm a married couple that owns a property and then one of the spouses passes away before we sell, now my exclusion is back down to 250, even though the house value is still where it was. So there's a lot of reasons why that exclusion amount, which hasn't been changed since 1998.
So I'm going to make one
should be
suggestion.
increased.
So I love that story, and I never thought about that. So listen, I haven't thought of everything. Big secret. I learn new stuff all the time. I just learned that. Thank you for sharing that. But you know what I learned at Triple Play when I did the probate specialist class? They talked about the importance of setting up your trust, right? Your irrevocable trust, because so that you establish a basis of the property. Like there's an advantage with the value of the property when you establish your trust 10 years early before the property actually transfers, that you get a big advantage in your basis and what it's valued at from that taxable standpoint, so that if something like that were to happen, you had already set up the trust, and you wouldn't be subject to that, what we call that a penalty. I mean, it's
right.
So.
Right. But it's something that's stopping people from putting properties on the market. And you and I in this business, we hear it every day.
Yeah.
We hear it where, well, I don't want to sell this house. It doesn't make financial sense. I can't afford to sell it.
Right.
Okay. And so what that's doing is it's holding inventory hostage.
And the other thing is, it's like, well, this house might not be perfect, but the truth is the perfect house isn't really out there. That somebody needs to transition from a 2-story, 1,800 square foot, maybe American 4-square, some style, a split level, into more of a 1,000, 1,100 square foot ranch or something that isn't itself going on 100 years old and they don't really want to do a lot of maintenance and such. And unfortunately, there's a squeeze on those properties.
Yes.
Because
it's again, it's two groups of buyers for the same property.
Well, it sounds like it's really, really difficult, and it sounds like you need a realtor more than ever. So if you ask me, the answer is just as realtors, is just to continue to reach out there, be in connection, and you have the potential to be the answer for someone, right? And this is, it's so. One time, so before being a realtor, I was in a different business, and like many realtors, we transitioned into real estate, and I had a company that was completely, not real estate at all related. And I forget one time I was a new agent, and it was hard for me to get my mindset right. And we used to sell some sunglasses. A lot of people know that story. And this agent in my office, she said, "Damn it, Chuck, you're not selling sunglasses anymore." And I got yelled at. But you know what? She was right. She was absolutely right. Like 100%. I go, God, you're right. I'm not so like, you don't realize how important, what an important role you play in people's lives, and how important these consultations are.
Yeah.
And how you need to be involved, like you are in Washington, and being an advocacy rep, for your local area, and the important role that realtors play, not only in the transactions of our clients, but in helping establish the environment, right, that enables people to become homeowners and to be affordable, to keep home ownership affordable, because it is the foundation of pretty much, I think, everything we do in America. Frankly,
Yeah.
it starts with home ownership.
Yeah. If you look at, again, you said it right, Chuck. This is the time of year where we're looking at numbers. We're looking at trends. We're looking at what's going on, especially with new administrations, what needs to be done. We're looking at, all kinds of legislative things. Real estate trends between 18 to 21% of the GDP every year. So it is important.
Yep.
We talk about also one of the things, and so Chuck posts a lot of good stuff on social media, and of course we follow each other. We hope you guys follow us too. But I loved one of your graphics that showed the downward trend of the size of new construction.
Yes.
And so, say a little bit more about that. Like,
well,
what drives that?
It's hard, it's because, it's being driven in the opposite, kind of in the opposite direction in a way. I mean, many buyers are trying to build smaller, and of course, many builders are trying to build bigger. Because, and from an advocacy standpoint, we need to try to do something to help our development costs be more affordable.
Even just lending to developers.
Right. I mean, it costs the same to develop the streets and the infrastructure for a neighborhood. Let's imagine a street's going to have 20 houses on it. Well, those 20 houses could be 1,000 square feet, or they could be 3,000 square feet. It doesn't really matter, and the builder would rather build a 3,000 square foot house. And frankly, they have to build the 3,000 square foot house because it costs so much to put the road, to put the electric, to put the sewer, to put, like the development costs are just so high. It's bananas.
Mm-hmm.
But it's really unaffordable for many of our, of our home buyers. We haven't really had like a neighborhood go up for first time homeowners, probably not in a generation.
Yeah.
What I mean?
And certainly not traditional styles. I will say that there's a builder a couple towns over from where I'm sitting, and they put up a development of what we would call single family attached. So it looks like, we used to say a duplex, right? So side by side, they're 2-story properties, about 1,400 square foot home attached to another 1,400 square foot home, but you're buying your half, and you're responsible for your half,
Yeah, I like those.
And you can do whatever you want with your half, as far as the, you're picking the siding color, you're picking the finishes. And then once it's done, it's your house. You paint whatever, you do your landscaping.
Can I do a barn door on the adjoining wall? Can I throw a barn door on that adjoining wall and be like, hey, what's going
neighbor?
on?
No.
Hey, neighbor.
Well, if you and I did that, and if Kathy and I would be happy to babysit. Oh, and when you and Kathy go out,
double our living space. I mean, come on, like,
yeah.
seriously.
I mean, I would, who knows, right? Like that's also, again, we have more and more, all kidding aside, multi-generational living, right? Like, maybe it's the type of house. One of our towns, they changed and I don't know if we've talked about it here or not, that what this town did, they decreased the minimum lot size, right? It's a little bit farther out. They used to have a 5-acre minimum requirement. They dropped it. Mm-hmm.
That's a little.
They dropped the acreage requirement, and you are allowed to build 2 residences detached on the property, but at all times one must be owner occupied. So they're not looking for you to build 2 rental properties on one. But if I want to build that 1,200 square foot house, and I want another 1,200 square foot house on the property that I can either rent or have a family member in, they are accepting of that.
It sounds to me like we look at properties all the time. It's one of the things we do, especially with, when you go onto your BNR and you see the listings, and, it's our job to know the listings. We have to know the inventory. Although I really am a I'm a bigger fan of Real Scout, where when I log on to Real Scout, because it doesn't show me the houses, it shows me my clients and it shows me what they're doing. And
Mm-hmm.
to me, that's the better connection. But that being said, I still have to know the inventory, right? So we got to look at the houses, but I find I'm paying more attention to the location of the house and the setbacks more than ever, because I'm looking at this house thinking, hey, can they add a 10 by
Right.
20 over here on off the garage, or can they develop over the garage, or that
Exactly.
I'm definitely paying attention to that. I see people wanting to do that, what you call an ADU on the property, more and more, and I'm seeing it. And the little town next to me, they've got ADUs as part of their acceptable uses in the zoning for the R1. So
Yeah. Yeah, and yes, that's 100% true.
mhm.
Again, so current trends. I also want to talk about, and unfortunately, we've had a lot of challenges throughout the country, whether it's hurricanes, whether it's floods, whether it's fires. There's been a lot of conversation about insurance and
Okay.
looking at your insurance policies, looking at what's covered, what's included, what's excluded. And I think, again, as realtors, we're not insurance salespeople. We're not going to
Nope.
tell you, what coverage to get, but certainly look at your coverage. Look at what if something should happen. And you know what? Call your agent. I did that recently. It's like you hear things, right? I had 3 friends, it seemed like in a row, that their basements flooded. And so what did I do? I called my insurance agent, like, hey, what kind of coverage do I have? Like,
Mhm.
I hope it doesn't flood, but if it does, what am I looking at?
Mm.
And then the next thing I did was build some shelves and get everything off the ground a little bit. I got
Yeah.
a blink camera that now is mounted above my sump pump. So I'm like,
Okay.
okay, because when I go away, I look at my camera and I'm like, okay, there's no flooding in my basement.
Nice. We had our Hannah insurance agent for Rochester at my office meeting this morning, Michael Lodge, Hannah Insurance. Thank you,
And he's
Michael, for
great.
coming.
Yeah.
And we talked about insurance a lot. And one thing that I want to share, which I thought was great, is um, one of the biggest, probably the most expensive insurance that we deal with, beyond just regular homeowners insurance, is flood insurance. If you're in a property that is in flood zone A, you're going to have to carry flood insurance. And there's 2 different programs. There's the FEMA insured program, and then there's the other one. I don't know the technical terms for it all, but with Hannah Insurance, they could only do the other one through referral, or somehow they had to. If the FEMA insurance was available for that area, you had to get it. They had to underwrite through FEMA. Well, that's not the case anymore. They can underwrite with the other one, and the FEMA insurance is very expensive. Like on a $200,000 house, you might be paying $4 or $5 grand a year in insurance, and now with the other one, you might be paying $1,000. So
Yeah.
it's just so much more affordable, and so I think it's going to be a great option for Hannah Insurance to provide a more affordable flood insurance coverage for their clients, and that's gonna mean a smaller portion of our buyers' monthly payments to have to go to insurance, right? So
Right.
they can get more house, because the number they qualify is the number they qualify for. However much of it goes to this or that or blah blah blah. We want the most as much as possible going to principal, right?
Mm-hmm.
So I had no idea that that's a new development, this year in Hannah Insurance. Yay!
Yeah. Yeah. And
We'll have
flood
them on. You can talk
insurance.
about it.
Right. And Mike is great. He's been around for a while.
Mm-hmm.
And the whole conversation about flood insurance in our area, because it's not, my office, we're in Hamburg, right on Lake Erie. It's not just when you're on a lake. You could be on a creek. You could be on different bodies of water. And then it also impacts where your property is on, you look at that, you've got your
Yeah.
survey, you've got the water flood line, and you've got your house. And depending where the house sits, to where the line is, to where the garage is, to where the shed is, it all makes a difference, right?
What's the worst flood you've seen? Like, what's the highest water level you've seen in person in a house in Buffalo, or where, in in the South towns?
Gosh, I don't even know. I've never thought about that.
I had a house listed, and it was in Alexander, and the Tonawanda Creek goes
Mm-hmm.
way, through Buffalo and through Batavia, and I think it empties into I'm sure it empties in the Genesee River. of course, which empties into Lake Ontario. So, but the Tonawanda Creek floods. It floods in the whole way. And there's this area down in Alexander and Attica that is more flood prone than some others. And I had a house listed, and it wasn't successful selling it. It was a long time ago. But 2 years later, I was on my way to Attica, and I drove past the house, and the water was halfway up the windows on the first floor. And I said, whoa, it really isn't a flood zone. Holy cow. So it's like we always, like, I feel like, and the reason I say that is because I feel like we often think, oh, why do we need, it won't
Right.
flood. No, it will. It really, it happens. It's a serious risk.
Yes. Yeah.
Big,
And you don't want to have water halfway up your first floor. Well, you don't want that ever, but, and then find out you're not covered, because the cleanup, the repair is massive on something like that. So,
big,
talk about it, but, and then look at what is there and where it is. And that's where, when you're looking at a property to buy or sell, like that's the thing, right? If you owned that house and you own it with a friend, your friend, the bank with all the money, and your friend at the bank is going to be like, you're getting insurance, right?
Yeah.
We're insuring this property.
Beware of, go ahead.
Once you pay off that mortgage, there's not the person forcing you to get that flood insurance anymore. So there are times an agent might talk to a seller and say, oh, are you in a flood zone? Do you need flood insurance? And the seller says, no, we don't have flood insurance. If they don't have a mortgage, that could be very true. But if your buyer needs to get a mortgage, then they're going to have to get flood insurance. And then it goes back to, like you said, Chuck, that extra expense. And that's when you want to try to shop a little bit and see if you can get a better price.
Okay. I'm going to say, just beware of houses on like Creek Road, Watershed Way. That's what you want to look out for. If you look at an address and it's something Creek Road, just saying.
View.
On view. Yeah, exactly.
All right. So you can't just go by the street name as a positive, or no, Dry Dock Road doesn't mean it's never going to flood.
But your radar should be going off when you.
Yeah. But the way to verify, again, another plug for our company, because obviously we're here for a reason. First priority can order what's lovingly called a flood cert, for a flood certificate, on an address. So your first P rep, hey, here's the address, run a flood certification, because and that's how they frankly catch it. If someone misses it and you're getting a mortgage, is all of a sudden they do a flood certification, and then they come back and say, hey, we're going to need flood insurance, and it's $4,200 a year.
Or call Hannah Insurance. That's what Michael said in our meeting. He goes, call me.
Yes.
I'll run it, check it out. We're the insurance company. I said, it's an insurance question. Let's call the insurance company.
Yes.
So
on. And better to know right up front what it's going to be. Absolutely. So we also see, again, due to our environment, I know in Congressional District 23 in New York State, right now, 18% of the properties in that congressional district require flood insurance. And it's expected to rise to 20% in the next 5 years as our topography changes. Okay. So you got a 1 in 5 chance coming up that you're going to need flood insurance.
That's one of the reasons I think new construction is so expensive, because a lot of the times, one of the reasons you've got new construction is because it's in an area that hasn't been developed yet. And the reason it hasn't been developed yet is because it's probably in a wetland, right?
Or it's got you got it,
right?
Utilities.
Otherwise it would have been developed already, right? I mean,
yes.
So we have to develop these new areas. We have to figure out new places to live. And in order to build in those areas, you're building styles that don't have basements because the areas are so much wetter, right? And you have to build to conform to the codes that are required by these more challenging environments. So it's one of the reasons we're getting the squeeze we talked about earlier. It's a big deal.
Yes.
Smaller houses. I like a smaller house. I don't know what was going on. I mean, listen, I'm going on 50, and I feel like our house is small. Our house is about 1,600 square feet, right? Like, it's not tiny, but it's not 2,600 or 33. I mean, I feel like it's perfect size. I can't imagine being in a bigger house, but it could be, but I wouldn't want it that much smaller either.
You found the sweet spot.
I think I found the sweet spot. Yes. So small house, big backyard.
And that's your preference, right? Mm-hmm. Like, we see a lot of people like look at the generational changes. I want to lease a car because I don't need that 4-bay garage because I want to tinker, right?
Yeah.
I need a spot though for my bicycle. My bicycle's worth more than my car, right? Like I'm saying
I
for
I gotta throw a
not me.
flag on that one. That's some bad planning.
Yeah. But, everybody's got different choices.
Bad
I remember
priorities.
when I was selling and I had a friend who was looking for a house and they were avid sailors. We looked at a house and the two of them were like, I'd pay that for a boat, but not for a house. I'm like, okay. Oh, you haven't done that to me in a while. All right, let's talk about another current event, especially for our first-time home buyers. The Sunny Mae DPAL mortgage with an extra $30,000 available to
Correct.
first-time buyers.
Yeah, no, way to go, New York State. I love it. I mean, how many opportunities do you get $30,000 from New York State? It's fantastic.
Right.
So, one of the first thing I want to mention is just the confusing nature of the name of the loan, right? DPAL. It's a down payment assistance loan. It has the word loan in the name, yet if you just reside in the house long enough, the loan is completely forgiven, which is why we think it's more really like a grant.
Mm-hmm.
But if you don't live in the home long enough, which in this case, the DPAL plus is 30,000 and the residency requirement is 10 years. However, if you, let's say 5 years moves along and then you do want to move, life happens and you get credit for the half of the time. You don't have to pay the whole thing back, but you're going to have to pay back half of it. And then over those 5 years, you probably grew in value and you're going to sell it and you're going to have the money to pay it off. So
it's a fabulous opportunity.
Super. And so connect with your loan officer now or tell your agents, tell your buyers about it. And I think the income requirements for a single borrower around 63,000. If you make less than 63,000, you would qualify. So I'm excited.
It varies a little bit by county. It varies by housing, family size, occupancy size. So get the details, but it's worth checking into because it's huge.
I've got a buyer that we are looking at houses and she's qualifies and I just got to find her. I just got to find her a house and I can't wait. I got a buyer this grant last year in this, 2 years ago. The last time the grant I think it was 2 years ago. Whenever it was out last, I got a buyer and it was great. I mean, she wouldn't have been able to get the house otherwise. And now she and her son live in the house and she's great. The house is fantastic. It's great for the community.
It's a great program.
Great.
But keep in mind, it is there's a finite amount of dollars that are allocated for this program. So we're telling you to find out about it. Look today because the money could run out April, May, June, July. We're not sure. So
there's so many different programs, right? This is one program. I mean, another program that's really common and popular and that people are getting into right now are getting onto banks' home dream grants. So that's in those. I saw the paperwork for a home dream grant. I think it was 20,000, which is a lot.
Yes,
more than I expected. I thought it was only be around 10 or 12. It was 20.
Yeah. And find out what's available in your area. My town has a first time buyer grant. There's a lot of them out there. And now keep in mind, this is when, we're always going to talk about that buyer consultation, knowing the market. If a house has just hit the market today and they're delaying showings and negotiations, they anticipate a flurry of activity and offers. It might be harder for an offer with a grant to be accepted, but we also see houses. I just pulled one up today for an agent. It's been on the market 3 months, so just because one house is selling quickly in multiple offers, that's when you want to talk to your agent. Like, all right, let me go back to this one. It's been on the market a month. It's been on a little bit. Like maybe this is the place where everybody can have a win.
And don't forget about the multifamilies. Just you're getting a grant or a down payment assistance loan. It does not have to be in a single family house.
Yeah.
That DPL plus is good for anything from a 1 to 4 family house. So you just got to have $1,000 of your own money in the fight there to get the house. And so you could have the grant and then you could have a tenant. I mean, it's crazy.
It's beautiful.
So, yeah. No, I can't wait to hear these. I want to hear the stories from our agents and other agents who are watching. Or if you're watching and you're the recipient of one of these grants, like I would love to hear the story of the difference that it made in your life. I mean, that maybe I should call Katie, who bought the house in Batavia, and I'll ask her to tell
Yeah.
me the story of what it's been like in this great little 2-bedroom ranch, pretty close to the Muck Dogs baseball park there.
Perfect.
Mhm.
Perfect. All
Yeah.
right. Well, I think we covered a lot of current events
I think
and what's going on in real estate. It's very exciting. And
Yep.
all right.
Yep.
All right. Well,
we covered it. I love it.
yes.
So,
Yes.
all right. Well, this is exciting. Thanks, Lisa, for joining me, and welcome back from Washington, D.C.
Thank you.
And you'll be heading to Panama soon.
Yes.
So, all right.
All right.
Well, all right. Thanks, everybody. Cheers.